into today's topic, which is the upcoming housing crash. Now, I've been hearing about this upcoming housing crash for about, I would say about 12 months now, and it has not happened. Now, I have a lot of theories about why it has not happened yet, or why it may not even happen at all, but that's not actually what I want to talk about. I want to actually talk about where the information is coming from and how people come to this conclusion that there's going to be a housing crash. Now, I originally thought as an investor there would be a housing crash in 2020 for multiple reasons. It never actually happened. Now, I'm actually seeing a lot of people talk about how it's going to happen here in 2021, maybe 2022, but I think that in order to understand why there was a prior housing crash, we need to actually go back and visit, why that happened and exactly why that may not happen in 2021. Now, everybody knows how 2008 happened. It happened because there are a lot of loans that are out there that were given to people who didn't really qualify, who didn't have the income to support the loan, that type of thing. Now, the main support that I see people using as a reason why there may be a housing crash coming up in 2021, they like to quote the mortgage forbearance that's currently happening with the whole stimulus package and keeps getting extended. Now, I do feel like there is a population of people out there who genuinely need a mortgage forbearance because they have been laid off. Everybody knows jobs have been lost with the pandemic. That's not a secret. However, there are also a multitude of people who took out a mortgage forbearance who I would say didn't really need it. Now, being in real estate, I talk to a lot of people who have taken out a forbearance for one reason or another, but a lot of the, I would say honestly, a majority of people took it out because they just want to save money. I have a lot of people that I know that are fully employed, have not missed a day of work since the pandemic started, myself included, because I also have a full-time job as well as real estate. Now, a lot of us have not lost income. However, there's this thought that if I save money by taking a forbearance, if I lose my job down the line, I could use that savings to pay the mortgage after forbearance ended. And I see that happening a lot. So I think that what we're going to see coming up in 2021, as the forbearance ends, I feel like we're going to see a lot of people exit forbearance and continue to make their payments as if nothing happened. I actually think that's going to be a large population of people who actually took the forbearance. I think that they're going to actually continue to make payments and put the balance onto the end of the loan because that's what most forbearances include. There are some forbearances that have a balloon payment, but honestly, that's not the majority. The majority of people have a forbearance where your payments get put onto the back of your loan, similar to an auto finance forbearance where you just continue to make payments and your loan technically doesn't end when it should end after 30 years. Most people will sell their home before then and they'll have to foot the bill for that at the sale or the closing table rather. You're not going to get away with that. This is not going to happen. But most people don't really see that as a bad thing because for the time being, they want that instant gratification of saving money. And I understand that. Being in SoCal, it's not unheard of to have a $3,000 mortgage, $4,000 mortgage. If you save that for 12 months, you could easily save up $36,000, $48,000 over a span of just 12 months. That's actually very tempting when you're in a pandemic because you don't know what's going to happen with your job. You don't really know what's going to happen with real estate. So why not save that amount of money? It's very tempting to do. I have not done it on any of my homes, but it is tempting. Now, as far as a crash coming, I think that term really needs to be used with caution because first you have to define a crash. Everybody has their own definition of a crash. Some people may think a 20% discount in pricing is a crash. Some people will say 50%. I know back in 2008, there were homes that used to sell for $700,000 here in SoCal were going for like $350,000. Now, to me, that's an epic crash. I don't know if we'll see that in our lifetime again. However, I do believe strongly in a correction of pricing. What do I mean by that? I think that pricing has gotten way out of line as far as income and home values. I do feel like there's a very strong disconnect between the two. Now, here in SoCal, prices in this neighborhood, particularly where I live, the house I actually bought what I consider was the peak. I actually bought in May of 2020 when the pandemic was first getting off the ground. Everything started to shut down in California. I bought a house because I was already in escrow. I thought strongly about pulling out of escrow because I really felt like prices were going to take a dip. And I felt like with people not selling their homes and people not working, I felt like I probably could have got a better pricing on this house. Well, fast forward, Now we're in January 2021. The same house I purchased for $480 back in 2020 is now selling for $610. So I would say that was a gamble that I took on this home, because I really felt like I was going to lose money on this home even 12 months later. But come to find out, I actually gained over $100,000 on this home already if I sell. Obviously, if you don't sell, you haven't really gained much. So with that being said, you know, it was a gamble, but I do feel like I don't regret it. I don't know if I take that gamble again, because I do still feel like prices are disconnected with income, and I feel like eventually they will have to correct. Now, I don't know if I believe particularly in a crash per se, but a correction I do feel like strongly is going to happen. I can't say when, obviously, because nobody has a crystal ball, and if anybody tells you different, then please ask them to borrow their crystal ball, and then give it to me when you're done. So with that being said, the correction I think is going to be due eventually, because prices can't continue to escalate the way they have been, especially in this area of SoCal. You know, they're even higher than they were at the peak of 2008. So it's definitely going to happen. Nobody knows when. So for those of you that say there is going to be a housing crash coming up, I would say, you know, that is dependent upon your locale. I know SoCal, here in California, our prices tend to be very volatile. I mean, you can go from $350 to $750 and then back all the way down again in a matter of, you know, 12 months. That can happen. It has happened. So that's not to say it won't happen again, but there are certain areas of the country where prices are just not that volatile. You know what I mean? You just have to really consider your area where you plan to buy, and consider where you're getting your information from. You know, obviously a real estate agent is going to tell you there's never going to be a crash because they want to sell you a house. So definitely consider your source and where you get your info from. Now, as far as, you know, the people who say for sure there's going to be a crash, I would say to them, you know, obviously nobody knows for sure, but I would definitely ask, why do you feel that is, and what do you have to support that, besides just the forbearance, you know, crisis that's going on. Besides the forbearances, what really do we have to support that it's going to be an absolute crash? What I consider crash, 50% discount on houses. So that would mean the house that I bought for $480 back in May will now sell for $240. And I feel like there would have to be an extreme event for that to actually happen, especially in a short period of time. Again, I love to buy real estate, so if prices get cut in half, that's great for me. I'll buy even more real estate. However, I just don't really see that being, you know, happening anytime soon, or I don't know the event that would happen besides just the pandemic. Because if there's anything that the pandemic has shown us, is that you just don't know. And most people would think that during the pandemic, when people are not selling their houses, people are out of work, and they're not paying their mortgages, their prices would drop drastically. However, prices have actually done the absolute opposite. They've actually gone up further than we ever thought was even possible, past the pre-crisis of 2008 levels. They have gone up past that, and that is absolutely astonishing to me. I never thought that I would actually see that happen in my lifetime yet again. So, you know, prices went, you know, they kind of ticked up a little bit, and they kind of just spiked up. You know, 10%, some areas are only 6%, but even the 6% increase over a period of 12 months is actually higher than what is normal. And this house that I'm in currently right now, that I'm talking to you in, has gone up way more than normal. And it's absolutely, you know, I've considered selling the house and actually buying a bigger house and pretty much getting the same exact payment because of the down payment I would now be able to put down on the new house from the equity of this home. So that's something I'm actually struggling with right now, because I would joke that, hey, I bought the house for $480. If it ever reached $600, I would actually sell the money, take it, and buy another home. Well, now it's at $610 that they're selling for. So, you know, I kind of have to eat those words because I don't want to move. But that's kind of like, you know, something I always said, hey, if I got to that level, of course I would take the money and go. But, you know, being here only 12 months and having that be the reality, I have to second guess it because I really don't want to move, but at the same time I almost feel stupid for not taking the money and going. You know, because I am a small time investor. I don't have millions of dollars in capital like some people do, but, you know, over $100,000 in equity, that does put some things into perspective, and it makes you want to make certain moves that you wouldn't normally make if the equity position was lower, so to speak. So as far as the housing crash goes, my opinion is there will be a correction. I don't think there will be an all-out crash. As far as first-time home buyers, I think that is something that a lot of them wish for, because they do want to buy a home back at 2010, 11, 12, some parts of 2013 prices. I remember those prices. They were very, very low. However, also keep in mind back then, it was a little difficult to get a mortgage. There were people with 720s, 730 credit scores who were still getting turned down for mortgages because the lending was so tight. The banks were like this with their money. They didn't want to give the money away. They wanted to make sure they crossed all their T's, dotted all their I's before they wrote any mortgage. So the event of a crash happening would mean there would be significant foreclosures and short sales going on. And with that being said, most banks are going to be very cautious when it comes to lending. So if you are hoping for a crash and you really genuinely think that based on your locale, you have enough reason to think that's going to happen, I would highly, highly advise you to get all your ducks in a row, cross all your T's, dot all your I's, have a great down payment, have an excellent credit score, because you're going to need it if banks get tight with lending, as they did after the crash of 2008. It was very hard to get a mortgage. The rates were actually pretty high. So some of the homes that were selling, the payment wasn't that different than it was when prices were escalated because the interest rates were so high. We have very, very low interest rates right now. So if the prices do go down and rates tick up, you may not be saving as much as you think that you're going to. And if you're an investor who relies on rental income, you want to hold the property, but you're going to take out a mortgage and leverage yourself, that interest rate is actually very, very important, because that affects your monthly payment. Who cares about the price if what you're worried about is the monthly payment? If your payment's going to go up because of the rate, but the price is lower, but your payment is still higher than it would be today, it does not make sense to wait for a crash unless you plan on like flipping homes, or you want to sell in a short period of time after the crash and maybe on the uptick. That's when pricing helps you. But if you're focused solely on the payment and getting a surplus of money after the renter pays the rent, you want to have obviously a good position to have a positive cash flow, then what you're looking at a lot of times is the interest rate being low. And right now they are super low. I'm currently in the midst of a refinance right now, not on this home but a different home, because it currently has a 3.8% interest rate. 3.875 is actually what it is. But I'm actually in the process of closing on a 2.6% rate, which I think could be a little bit lower, but based on the location and the taxes and everything like that, not really surprised. But it's still a lot better than what I was paying right now. I'll be actually saving a little bit over $600 a month on the payment, because the PMI is actually coming off because of the equity that's now gained on that home. So we have a lower rate, and we also have no PMI at this point on that home, because the value has risen so far past what I paid for back in 2016 on that home. I paid $410,000 back in 2016. I now have to bounce down to $350, and the value currently is $560. So we have a great equity position on that home as well. I usually like to talk numbers personally on my homes, but I just want to kind of reiterate how much equity some people have. And I also think that comes into play when it comes to the foreclosure crisis that people think is coming up. Now, when it comes to the end of someone's forbearance, you have to also remember there's a lot of information out there, YouTube, the news, everywhere, everybody's talking about, equity, they're talking about interest rates. Somebody that may be coming out of forbearance, they may not have a job anymore, they may not be so quick to foreclose if they know they have $100,000 in equity. Now, I know personally, if I had $100,000 in equity, there's no way I'd foreclose. I would put the house on the market. They're selling, like in this area, they're selling within 3-4 days. There's no reason why in certain areas anybody should foreclose when they have a lot of equity. That's not everybody's case, but most people have over 20% equity in their home right now, even people in forbearance. So you could walk with a large sum of cash. Maybe you don't have a home anymore, but if you're going to lose it anyway, take the cash, take the equity, sit on it. I don't care what you do, but please don't foreclose. It's the worst thing you can do. Don't let the bank have what's yours. If you build that equity up, whether it's a shot up because of the prices or because you paid the mortgage down, do not let the banks take that from you. Please don't. If anything, walk away with your money and your credit intact, especially your credit, because if you get another job and you're sitting on that equity and you have a decent credit score still because you sold your home versus foreclosing on the home, you can easily buy another home after a couple of years when you've been on the job and you can show stable income, stable time on the job, which is usually 2 years. But even with some lenders, they say 2 years. But if honestly, they're very understanding when it comes to the pandemic, and people know that other people have been laid off. So if you get another job, you've been there like 7-8 months, I've seen people still get approved because they know there's a pandemic and people just lost their job, but they get employed in the same industry. So they're a little more lenient with that rule. It's not a hard, fast rule, so don't worry about that. But again, equity is a very good topic that people don't really seem to touch on because, you know, it kind of goes opposite of what they're saying about the housing crisis, because people do have equity and they can sell. And with the demand being so pent up and so high right now, the people who sell their home are not going to have an issue. They're really not going to have an issue because inventory is so low and there's a lot of pent up demand out there, especially in states like California, Texas, New York. Well, New York's struggling a little bit, but especially in California, you know, I go on Zillow frequently and I see the same overpriced homes over and over. There's really nothing new. When something new comes on the market here in Southern California, it's off the market 2 or 3 days tops. You know, and I've heard of 10 offers. I heard of a coworker of mine went to an open house on the first day. They already had 30 offers when she got there. So they're selling. Someone's going to buy your home if you need to get out of it very soon. So that's the case right now. So housing market crash, I'm not really buying it right now, but in the comments, definitely let me know what you think. If you're going to tell me what you think in the comments, definitely go ahead and document what area you're in, because everybody's area is a little bit different. And I don't want to blanket this statement, but here in SoCal, I don't think there's going to be an all-out crash. But in the comments, go ahead and let me know where you're from. Let me know what situation you're in the housing market. What are you hoping for? What are you doing in the process? If you're waiting for a housing crash, what are you doing to prepare yourself to be in a great position to buy if that actually happens? So definitely let me know in the comments what you're doing to prepare, what you think about my commentary, what you think about the housing market, how you think it's going to change in 2021, maybe even going into 2022. What are your predictions? Let me know what you think down in the comments. Be sure to like, comment, and subscribe to the channel. We're going to have a lot more videos coming out about this very topic.